And it's the TGIF trade right here in Lagos, Nigeria. We see markets are gyrating globally. Here's what's coming up in the next 55 minutes. I see billionaires Dangote and Elumelu and others are present at the AFRIMEX Bank 2025 annual general meeting today. I see foreign direct investment inflows into Nigeria declines by 19% to $250 million in the first quarter of 2025. As the world commemorates World MSME Day, the spotlight rightly returns to the micro, small, and medium-sized enterprises, a sector long regarded as the heartbeat of the Nigerian economy. It's good to have you join us. I'm Ladi Williams. Let's get a quick check on what's playing out with the markets that we're tracking out. Starting with oil, we're seeing oil prices are up today, though it's set for a weekly decline, going by what we've seen with trade this week. $68.21 a barrel. That's for Brent crude there, 0.71% up today. $65.70 a barrel for the U.S. grade there, up 0.71%. With the big drops we saw earlier during the 12-day war that started after Israel targeted Iran's nuclear facilities on June 13th. We see Brent prices rose briefly above the $80 a barrel level before slumping to $67 a barrel after U.S. President Donald Trump announced the Iran-Israel ceasefire. That put both contracts on course for a weekly fall of a big 0.12%, at this point, calculating all the drops that we've seen this week. That's big drop for about 2 days. All right, so other matters now. Let's look at the metals market. We're seeing it's mostly red there for the metals market across board. Big drops there for platinum. 4.16% down, $1,356 per ounce, followed by palladium with a big 1.45% drop. And we see spot gold, that's a big drop, losing that $300 mark of the $3,000 level. U.S. gold futures 1.60% down. And we see spot silver not left out there. Also, all of them outshined at this point, $35.81 per ounce. That's for spot silver, down 2.13%. So we're seeing even the gold market, the metals market, that's set for a weekly decline. To other matters, the world marks World MSME Day today. Nigeria's re-emphasizing the critical yet fragile role of micro, small, and medium enterprises as a heartbeat of its economy, with MSMEs accounting for nearly 48% of GDP and employing over 84% of Nigeria's workforce. The sector represents the nation's principal source of employment and innovation, yet between 2023 and 2024, approximately 7.2 million businesses folded, nearly 30% of a national count, citing inflation, interest rates, FX volatility, insecurity, and restricted access to financing as a major threat there. That's according to NESG data. Recognizing the sector's immense potential, the federal government is launching a de-risking fund aimed at lowering interest rates and broadening credit access. However, experts stress that without improvements in infrastructure, regulatory clarity, digital tools, and support for women-led enterprises, many MSMEs will remain isolated from broader economic opportunities. They argue that meaningful revival requires not only financial capital, but targeted interventions from the market integration via AFCFTA to robust incubation hubs and public-private partnerships there. All right, to other matters now. Definitely, we're still seeing what's playing out there at the AFRIMEX Bank annual general meeting, and we have comments from the big boys at this point with Dangote there, making a case for Africa industrialization, and says it's time for Africa to stop over-reliance on a couple of things at this point. Do take a listen.
If you look at it today, why do you want to bother going to the U.S.? You should,
The U.S. should want to come to Africa because we've got the resources,
yeah, of course,
right?
You should remain at home. We have 60% of the world's arable land.
Yeah.
Agriculture is not cheap. Okay, we have all the mineral sources from gold, lithium, diamonds, everything. We have it here. So all what you need to do is to start giving conditions to people. Don't come and take my cocoa and process over there, and you come now and sell the chocolate to me 20 times the cost of that chocolate. So let us make our continent a productive continent. We're the only continent that has actually have growth. If you look at it today, Europe, with respect to them, there's no growth in Europe. They've reached a certain distance. So they need Africa to grow. Now we have a couple of players, but the main Maradona in the field is AFRIMEX Bank. If we can have 10 institutions like AFRIMEX Bank, it will be totally a different story.
That was Nigeria's industrialist there, Aliko Dangote, right there, the AFRIMEX Bank AGM. And we also see in another session there, the chairman of Hairs Holdings, Tony Elumelu, shared his observation on business climate on the continent. He says the situation is getting better, although there are more miles to cover. Take a listen.
I speak as an investor that invests in 20 African countries. And I know that the investment environment today is different from what it used to be 4 or 5 years ago. Starting from Nigeria, for instance, I told you we cooked a transaction, $2.5 billion. The government of the day said no, they spoiled it, they killed it. But today we have a government in office that has, so you said to have 2 OMLs was too much in the hand of the private sector. But we have a government today that has allowed the separate Exxon transaction to happen, which is much bigger. We allowed to have a country in Nigeria that even that shell asset, all of it, Renaissance, they bought it. So a government. So we are beginning to see government that understands business and government that does not feel threatened by business. Because what is good for business is good for citizenry. You know, like Aliko Dangote said before, investors, why are you going to look for foreign investors? Investors will not invest in your country if they think the investment environment is hostile. Okay. So the best way to attract investors is support your domestic investors. As they invest in their economy, others will see, and what is good for domestic investors is good for foreign investors. So back to the point, we are seeing improvement all across countries.
All right, so our first conversation now. Yes, it marked a historic turning point for Nigeria's fiscal landscape. See, President Bola Tinubu officially signed 4 sweeping tax reform bills into law set to take effect on January 1st, 2026. These include the Nigeria Tax Bill, Tax Administration Bill, Revenue Service Establishment Bill, and a Joint Revenue Board Bill. Together, they usher in a unified tax code, a newly empowered Nigeria Revenue Service, and a streamlined appeals and ombudsman framework, and sweeping reliefs for income and VAT exemptions for low-income earners to generate for generous incentives for MSMEs, agriculture, real estate, and housing. Well, joining us to unpack all of this, we have Marvis Udog, who is a team lead, taxation, immigration, labor, employment practice group at Stren and Bland Partners. Great to have you on the show.
Thank you.
So, you know, definitely quite a historic moment there. But seeing that even in Kenya, they also had their historic moment too, with President Ruto also signing their finance bill into law. And we had the same thing in Nigeria. Do you find that coincidence interesting, or do you think this was all planned?
Yes, I thank you, Ladi. It's a pleasure to join you to discuss this. I mean, Kenya and happening in Kenya and happening in Nigeria, it shows one thing, that countries with comparable economies, like that of Nigeria, are beginning to wake up to the potential of what a robust tax framework and a workable tax system can do. And it's not coming as a coincidence right now that both countries are having it at this point. If you look at the trajectory that is moving on in the world, you'll find out that everyone, especially the governments around the world, are looking towards harnessing internally the as much revenue as they can, from their tax system. So I feel it's coming at the apt time, for both countries. Thank you.
So what impact will the tax exemption for low-income earners, what do you think that will have on, household spending? And, we've been talking about reducing poverty, taking millions of people out of poverty in Nigeria. What do you think that does for poverty reduction?
A very beautiful question at that. I will want to borrow the words of the chairman for the presidential tax reforms and a policy committee, Mr. Taiwo Oyedele, who said that the Nigerian Tax Reform Act, I don't want to call it bills because it's already been passed and assented to by the president, is pro-poor. He used the word pro-poor. Pro-poor in the sense that it's made to lift the burdens of the poor masses, and a practicable way that the tax acts have done this is to ensure that everyone earning anything below 800,000 is not liable for the payment of an income tax. What is the effect of this? The effect of this is that there is more income left in the pocket of, the poor masses. Let me use the word the poor masses right now. And also the other channels of expenses that do not help the poor masses are closed up. It is tied up. Those loopholes are tied up. And the poor masses have at least more money to utilize for their day-to-day feeding and cater for other things, that they need to focus on. Also, on the other side, it will also help those that are into business, but are not beyond the threshold that are exposed to income tax, to focus on building the business itself till the business comes to a point of profitability and grows. That is one thing it has helped in the poor masses. It will also affect, the prices of food items and electricity, education, housing, and other things that were initially on the high side to affect those prices. Because you will find out that part of what influences these prices is the taxes that the manufacturers or producers, remit. In manufacturing or getting these services rendered to the poor masses. So on the long run of the whole thing, to the household and to the poor masses, this tax reform has come as a big relief, to alleviate the struggles and the burden on the Nigerian people. Thank you.
Right, and going by what Mr. Taiwo Idele said yesterday on Politics Today, says Nigerian households earning 250,000 naira or less are poor, and shouldn't pay taxes. And I remember there was a time, 250K wasn't that bad, but we've seen what's played out with currency devaluation so far. So I guess it's official. So you're earning 250K, you're poor.
Definitely, with this the inflationary rates in the economy, anyone earning 250K is definitely poor. That's the truth.
And I guess this can change if the naira, suddenly strengthens. At some point, maybe we get back to maybe the 500 level, to the dollar. I guess 250K will be back, on the middle class, at this point. But with over 50 nuisance taxes, being abolished and streamlined under the reforms, how might this shift influence Nigeria's, ease of doing business rankings and investor perception?
Yes, beautiful. You'll find out that from the Tax Reform Act, you'll find out that over 50 nuanced taxes have really been abolished and have been streamlined equally. If you look at the Nigerian Tax Act itself, you find out that not less than 11 status or principal status have been codified and brought into that very act itself. You will find that has created and made room for ease of doing business. Ease of doing business in the sense that the threshold for businesses that fall into small business has been increased. And then the burden of remitting the company income tax, and also the burden of businesses themselves remitting payee, that's the personal income tax in this sense, have also been reduced, provided that those working and those earning salaries or income are earning income, between 800,000 and below. And where it is also between the 800,000 and 2.2 million, there is a graduated level from at least between 0% rate to about 15% rate. And then it also moves from that 2.2 million to about 9 million. There's a graduated rate between that 15% to about 18%, and continuously. So it shows you first that the fears of businesses that they will be stiffened, the growth or the development of the business will be stiffened by taxes, is alleviated by these provisions. Now you see companies with an annual turnover of up to 50 million in Naira per year can have some reliefs and focus on business, focus on core businesses to grow their business. And it's also a relief in the ease of doing business now that, taxes, remittance of taxes itself would be much more easier than it was before. Before, you need to go to an office, you do this, enter this, tweak all those documents. But now the Tax Reform Act is focused to digitizing and modernizing these to ensure that business focus on the business and carry on their business. Businesses that are into a provision of food, provision of medical and healthcare facilities, rendering services that relate to accommodation, public transportation, they are eased of remitting VAT and remitting other taxes. For small businesses, of course, there are also ease of remitting or deducting and then remitting withholding taxes. And this is a big relief. Now businesses can go in and know that they can grow from the level of small businesses to nano businesses, grow up from that level until they come into the threshold where they can now comfortably pay taxes and remit their taxes as demanded by the tax law. So I think if there is any good time for people and investors to do business, this is the best time. And the president, while signing the bills into act yesterday, did mention that Nigeria for the first time has not just shown by word that they are prepared or they are ready to welcome the world to do business. They have demonstrated that, and that is what I believe that this Tax Reform Act have just done. Thank you.
So I guess this Reform Act could be some kind of silver bullet to solve all our ease of doing business issues. Hopefully that's enough. At this point. But the new laws empower the Nigeria Revenue Service and create structures like the Tax Appeals Tribunal and Tax Ombudsman. How likely is this institutional overhaul to enhance transparency, reduce corruption, and ensure taxpayer rights?
That provision is a very beautiful provision and one that I've been inking to speak on. The overhaul of what we know before now as the Federal Inland Revenue Service, beyond the nomenclature. When you look at the nomenclature of Federal Inland Revenue Service, there is that attachment of, these are persons working for the federal government alone and everything. But now the name Nigeria Revenue Service now has a more holistic and a welcoming or embracing outlook. But beyond the embracing outlook that we receive from the nomenclature Nigeria Revenue Service is the empowerment that is given to them. That empowerment is broader in spectrum, broader in outreach. Broader in outreach that it collects, assesses, and see to the accounting for taxes beyond what it normally collects. Now you will see the import duties, excise duties that once was customs member-based will no longer be collected by other federal bodies, but will be collected by this central body, the Nigerian Revenue Service. The Nigerian Revenue Service now, under the new tax law, is also saddled with the responsibility of sensitizing the people, ensuring that people are equally registered. Taxable persons are equally registered and obtain their tax identification card, and also obtain their tax identification number, and also they make sure that every non-compliant taxpayer is properly, prosecuted or followed the legal way after the needed notices are given. And also they have the body or the duty to ensure that regular rules and regulations or guidelines are provided to guide the people on how to comply with the provisions of this tax law. That is on the one side. One person did mention that with the powers given to the Nigerian Revenue Service, that they may start behaving like demigod, but not to bother about that, because that is not something that we keep to heart, because there is a body also established to checkmate and curtail the activities of these workers under the Nigerian Revenue Service. And one of those bodies is the tax ombuds. That's the tax ombudsman. And that tax ombudsman gives the layman, the lay taxpayer, the right to approach and report any perceived wrong or misassessment or malpractices that might have gone on between the worker from the NRX, and that will be practically looked into, investigated, and the report will be given within a number of days, and which should not be more than 14 days. On the other side, where we have the tax appeal tribunal, the powers of the tax appeal tribunal has now been a little bit expounded, because before now, the tax appeal tribunal, the constitution and the matters that they have, it seems they don't have jurisdiction over some taxes administered by the internal revenue services of the different states. But right now, that has been elaborated. More reforms, especially on the fiscal side, will come in to ensure that the provisions of this tax reform acts would also be made to align with the constitution in time to come. I think that is the wisdom behind suspending the implementation of this tax act for now till up to 1st January 2026 to enable it to commence. So between that time, the necessary frameworks and the necessary foundations to be laid to ensure the proper working of this tax provisions of this tax reform act would have been laid, and everything would be good. So I think the provisions will enhance for transparency. Transparency now will be that some companies, any company found or any taxable person found to have been involved in evasion of taxes will not only be penalized, but also the tax practitioners who had advised them must be licensed by these bodies. And that tax practitioner, if it is discovered, had wrongly advised the company, may equally suffer a penalization and even a withdrawal of the license given to it. So it's a very much, it will promote transparency. It will also reduce corruption. It may not eliminate corruption entirely, but it's going to reduce corruption and also protect the taxpayers' rights. Thank you.
Right, and definitely everyone's bracing now for January 2026. That's when everything will come into full effect. But what should businesses be doing now to prepare for that time?
Yes, definitely. This is the best time to prepare and get the house in order to make sure that when the time comes, we hit the ground running. That's it.
Right. But what exactly should businesses be doing now, especially some small businesses?
Beautiful, yes. Beautiful. As it is now, businesses must at this moment, first of all, take a look into their internal records, because this is the proper time to do that. Look into their internal records and also begin to practically restructure their spendings, their expenditures, the income, the inflow, and the operations to align with the incoming tax provisions. This is the time to consult tax practitioners. This is the time to consult seasoned practitioners in that area for proper guidance. This is the time to make sure that the books are well prepared. And this is the time to make sure that any outstanding tax liabilities are cleared. The reason being that uncleared tax liabilities may incur stiffer penalties under the new tax regime that is coming in. So businesses must make sure that they clear their board as of now from every tax liability that they are owing. Now, also businesses must now take a proactive step to restructure their internal workings. This is the best time to do it, restructure their internal workings to align with the provisions of the tax, act. Businesses must also take to heart the importance of record keeping. In activities where they have not kept records, business must actively keep those records.
Right. All right.
So that once it is 1st of January, everything is good to go.
All right. So I guess the message is at this point, all ye businesses, put your house in order before the 1st of 2026. Thank you so much. It was great having this conversation with you. Marvis Uduogu is a team lead, taxation, immigration, labor and employment practice group at Strennan Bland Partners. Thank you for coming on today.
Thank you. It's my pleasure. Thank you very much for having me, Suladi.
All right, so we see a major development in Africa's sustainability landscape now. The Financial Institutions Training Center in Lagos, they've positioned environmental, social, and governance, or ESG, as a critical lever for Nigeria's economic competitiveness and institutional strength. This next report focuses on the FITC Sustainability and ESG Conference 2025. Take a listen. It's the inaugural FITC Sustainability and ESG Conference held in Lagos under the theme, Building a Prosperous Future, Unlocking Growth Opportunities Through Sustainability and ESG Innovation. FITC Managing Director and CEO, Dr. Chizo Malize, declared that ESG is no longer optional, it's essential.
The E component is environmental, how every single one of us can become very responsible about it, how our businesses can be run either as CEOs or managers, or even as staff can make contributions towards that.
Adding depth to the conversation, ESG expert and senior advocate of Nigeria, Professor Fabian Ojogu, highlighted ESG's strategic value.
If you look at family-owned businesses in Nigeria, I don't think you will find many that have gone from one generation to the other successfully. I think it's a statement of fact, right? The big names that you have heard of 40, 50 years ago, you find where those businesses today. And that's a big failure from a governance point of view.
The conference convened leaders from finance, academia, government, and civil society, including representatives from the Central Bank, International Sustainability Standard Board, and the NGX regulation.
Financing in that weak model for those who provide access to the things that trigger ESG. Photo electric rates, manufacturing photo electric rates should be the kind of things that are transactional, discounted financing because it triggers and powers green energy. Solar, the biggest component, the solar alternative is the photo electric plate plus the batteries. I can tell you, the battery, the Chinese are taking big opportunity in the battery space.
The whole idea is to ensure that we create knowledge contents, learning programs, capacity development programs, strategy design, and reporting principles to help both organizations and businesses to be ESG compliant. The big thing is that given the ownership of our organization, the institution, and the solid 43-years-old heritage, we have brought so much knowledge to the financial service sector. And so extending that with the ESG Institute is remarkable.
The FITC ESG Summit not only marks a milestone, it signals a broader shift as global green investment and climate finance become mainstream. Institutions across Africa are being called on to embed ESG strategic frameworks to stay relevant and unlock new opportunities. All right, so TGIF trade today. Let's see if investors are having fun, this time.
Yeah,
this
they're
Friday.
kind of playing with the bear. I don't know if the bull playing with the bear, just having fun with the bear right
So the
right
bear
now.
is dominating?
Dominating a bit, having that hold on the NGX, I want to say, not
just the
all
NGX.
markets. Yeah, well, some of the markets, but the NGX in particular, because we did see that profit-taking setting yesterday, but extended profit-taking in today's trading session. We see it going down as high as, say, not so high, mild profit-taking, 0.08, about that level.
But does 120 hold for
120
the NGX?
holds. 120 holds.
Yeah, okay,
so
I guess.
maybe we've seen a new, is it resistance or
I guess 121
resistance?
is resistance now.
And then the 120 cannot be support.
It can't be support.
Well, it can't be support at
We don't know yet.
Yes. The market is still, like you said, it's on uncharted waters right now, territory. So we'll see how far the market can go and where it can settle down. So let's just jump in right in. We see major stock markets in Africa were negative at intraday. Nigeria's NGX traded lower at 0.04%, but at the time I checked much later, 0.8%, 0.08%, and going down forward. Let's see if they will rebound at the close of business. We see extended profit taking happening at the NGX. Let's look at South Africa and GSC. The index was trading also down 0.34%. That's over 1/3%. Elsewhere, EGX 30 in Egypt was closed for the week, but in positive territory. We see it up 1.24%. Meanwhile, the Nairobi Securities Exchange closed Thursday's session in green territory, up 0.93%. But let's dive deeper and see what's driving sentiment still at the NGX. We will see a rebound at the close of business. What are stocks investors trading or fading? And Chinazom is our senior investment broker at Patient Securities, joins me. Good afternoon, Chinazom.
Good afternoon, Will. Thank you for having me.
Chinazom, profit taking has extended. We see that extension for second trading day now. How long do you see this continuing for?
So with a lot of trends, at times we see them carry on for 3 days. But in this particular instance, you have to be mindful of the fact that we're coming to the end of the month, and it's the end of quarter and it's the end of half year. So of course you can expect that there's a lot of profit taking, portfolio revaluation, and just window dressing that is going on in this period.
Oh, so not investors putting in money. I thought it was the end of the month, and when people get their salaries, they just want to invest it somewhere. But it's the opposite we're seeing right now. But what stocks are driving the sentiments at intraday? Can you tell us what investors are trading or fading at the moment?
First in the bank specific, Access, Zenith, UBA. We saw large volumes and values in those banks. We also saw large volumes and values in securities like Elumelu, Caverton, and Japo opened strong this morning. So those are the companies that were really driving volume and value as at midday.
Okay, but if what's happening with the banking stocks? Is it just profit taking because you see Access Holdings? We'll zoom in on the banking stocks. Access Holdings is trading down beyond the VWAP level, so it's like about 22 naira right now. Do we see it going higher or going lower for Access Bank, for Access Holdings rather?
We've seen a lot of volatility in Access. Even the days that it opens high, it tends to fluctuate a lot within the day. So the volatility in that particular security has been quite strong. Current levels are not indicative of where it's likely to close, because we also have been observing that there seems to be a lot of transactions that happen towards the tail end of the market. So they might still surprise us with where they close today.
Okay, so let's look at the agri space now. That's the consumer goods sector. Presco is currently on full offer, although the price has not changed. But being on full offer, does it present a possibility of closing lower today?
I mean, with the market dynamics, a certain volume needs to be executed for that price to change. We will have to wait and see whether that happens. It's important to know that with Presco, we've seen a lot of movement this year. The company started out the year much lower, so there's a lot of appreciation. You can expect that with this being the end of an accounting period, a lot of investors are going to be looking to book that profit. And of course, there's a psychology to trading. If you see a lot of people are willing to sell, sometimes that just means that stimulates people to want to wait and buy low. So there's some of that psychology playing out in Presco. But of course, it's a company that had a very impressive Q1 numbers. We expect to see impressive Q2 numbers. So we are still watching to see how that is going to play out in Presco. And it's important to note that the security is still ComDiv. It doesn't mark down for its full-year dividend until July 4th.
Okay, so while we wait for the earnings of Presco and maybe like dividend payouts, let's just look at what happened yesterday and how that filters into the equities market. So the President Bola Tinubu signed the tax reform bills yesterday. How does that impact equities? Can you give us just a brief one?
I mean, for the equities market, that impact is going to flow into how those reforms are going to impact the listed companies. For the investors themselves, for shareholders, a lot of our participation is dividends that the tax on that is deducted at the registrant. But for the companies operating in that space, we're very happy about the fact that some of these reforms are going to streamline the tax system and reduce the burden, the double taxations, the multiple agencies. A lot of listed companies talk about the fact that there's a burden to regulation. There's a burden to complying with whether it's audited financials, whether it's the reporting or the returns. So streamlining things actually makes it easier for these companies to operate and operate profitably. We're also optimistic that the ease of business aspect of it is going to flow in through the economy and make Nigeria more attractive, even to foreign portfolio and foreign direct investment. So we're optimistic that it's going to reduce the tax burden on listed companies. The exemption of tax of VAT on critical products and sectors might also mean that we're going to see the companies that operate in those spaces seeing their sales volumes going up. So it's all very positive. I've seen a lot of reactions, and it's the implementation with the Nigerian government. It's always implementation. So we hope that these fantastic policies are implemented well.
Yeah, we always have these fantastic policies, but the enforcement implementation is where we have that weak Achilles heels there. But we hope the government works on this and, companies, ease their cost of, doing business, and double taxation is not, it possibly will be a thing of the past. So final trading day, Chinazom, how do you see the market closing?
So with where we are currently, I think it's going to be mixed. We might not close positive, but I expect certain securities are probably going to close higher than where they're currently trading. We've seen it play out in some of the banking stocks in the last few days, that even though they trade lower within the day, towards the end of trading, the buyers come back in and pull it back up. So we'll have to wait and see. It's going to be mixed to bearish.
Okay, so Chinazom, you're just standing in the middle ground there, mixed to bearish. We'll keep an eye on that. Thank you so much, Chinazom, Senior Investment Broker, Parthian Securities Limited. Thank you so much.
Thank you.
So let's look at other major equities in the Gulf now. Some of them are closed on Thursday, except in the UAE, United Arab Emirates, where we see Dubai and Abu Dhabi trading in positive territory at intraday. Dubai was up 1.26%, Abu Dhabi also up 0.77%. And then we see within the region, Saudi is trading, Saudi is closed for Thursday, and we see Qatari index is also closed, but in positive territory. Let's flip quickly to the U.S. Stock futures climbed Friday with S&P 500 nearing a record high. This optimism growing after the Commerce Secretary Howard Lutnick confirmed a trade deal with China, while Beijing also announced a framework easing tech restrictions and allowing rare earth exports. Dow futures are up, we say, in pre-market trading 0.23%. S&P futures also up to 0.25%. Nasdaq gained 0.32%. See that on the screen. And the market has rebounded 23% since April lows. Now, the Trump administration expects more deals with major trading partners soon. But let's get the highlights of yesterday's trading session with our correspondent, Maria Bird.
The U.S. stock market almost had a record-setting day on Thursday as the Dow Jones closed up at 0.9% up. The S&P 500 also closed up at 0.8% up. And the heavy tech Nasdaq closed the day at over 1% up. It is clear that the U.S. economy is having some positive signs. And the U.S. president has also announced through his press secretary that there's not a fast and hard rule for countries that comes to the table by July 9th, as this could mean a positive sign for U.S. global trade. As the president has also announced that he could be making a change with the chairman of the Federal Reserve, as his term is up in May of 2026. But there could be an announcement of a new Federal Reserve chairman by September or October. So the U.S. economy is watching to see how this will have an impact, as the president has been calling for a cut in interest rates, and the Federal Reserve chairman has been slow to act in this regard, as the president made this campaign promise to his constituents.
Thank you, Maria. Now, investors now with key U.S. inflation data with the Fed's preferred gauge, the PCE index, and that's expected to show only slight increases. Now, let's move over to Asia now, where markets ended mostly lower on Friday as investors reacted to fresh Chinese industrial data. China's industrial profits fell 9.1% in May, the sharpest drop since October, and it signals ongoing weakness in the factory, mining, and utility sectors. Japan's Nikkei 225 however, bucked that trend, jumping 1.43% to close at 40,000. That's for the first time since January. Well, South Korea's Kospi was down 0.77%. See that on the screen. Hang Seng index in Hong Kong, that's China, and lower. We see it down 0.17%. And also in mainland China, we see that gauge, that index, also ending lower. But let's look at cautious regional performance is also reflecting the concerns over China's slowing recovery and inflation trends in Japan. That's what's happening in China. Well, we see Nifty 50 is up at the close of business, but what's to say about the markets right now? We see that deal with Trump and the president of China. Hopefully, this reflects in the market. But I don't know why the Asian markets are reacting a bit mixed with that news. Are they not, confident in the deal?
Maybe they're not that confident until we see what plays out on Truth Social.
Yes, I think that is actually where they look out for. Is Trump really serious about this, or is this one of this, his talk shop, and then like you say, taco. Trump always chickens out. Always chickens out.
Taco trade. Well, let me take you back to some data out of Nigeria. They get FDI.
Definitely.
Q1, that dipped.
Lower.
But FPI, that did well.
Okay.
That rose. And we're also seeing on the tax front, Nigeria's financial sector generated about 570 billion in corporate income tax, leading all other sectors. We're seeing that breaking news, and that's for the third quarter of 2024. So we'll see all that
more data coming on, and that will actually shape
financial services leading there. I guess no surprises.
Of course, especially foreign investors and portfolio investors are coming in. These are the data that they'll be looking out for to see if they're going to be getting good return for their money or something like that.
Thanks so much, Will, for details there. Most of the markets that we track for the TGIF trade. But let's take it onto Europe now, European markets, and see how they're doing. DW correspondent Chiponda Chimbelu joins me now. Great to have you, Chip. Happy Friday.
Happy Friday, Laddie.
How are the markets looking over there?
Well, Laddie, European stocks are actually trading significantly higher today. The Euro Stock 600 is up around 0.9%, and Germany's DAX is trading 0.7% higher. Now, of course, investors have welcomed signs of progress in the US-China trade talks following discussions on rare earths. And analysts say also that traders may be tired of the trade disputes and may be actually trying to move past them. But of course, another deadline is looming for trade negotiations between the European Union and the United States. President Trump did set July 9th as the deadline for an agreement, and that is, of course, less than 2 weeks from now. And of course, we still do not know about how much progress has been made. So that is, of course, another date to look out for. We may, of course, before then see more volatility unless we get more clarity on whether a deal will be inked by the EU and the US by July 9th.
And, turning to other news now, we see the number of insolvent German companies. That's risen to the highest level in 10 years. As Europe's biggest economy, continues to struggle there, what do the latest figures, what do they show us at this point?
Well, Ladi, during the first half of this year, there were 11,900 companies that registered as insolvent here in Germany. And what that means, of course, is that they were unable to meet their financial obligations. And that is according to data from Credit Reform, which is a company that collects debt here in Germany. Now, the latest figure is 9.4% higher than it was during the same period last year. And of course, it shows that businesses in Germany continue to struggle with low demand, rising costs, and now also uncertainty, mainly due to the US's unpredictable trade policies. Now, for companies that were already financially overstretched, the situation has become harder because they cannot easily get access to credit because, of course, we do have high interest rates. And that is why the number of firms becoming insolvent is at a decade high. Now, that's, of course, despite hopes of an economic resurgence with the new government. Still, Germany is still stuck in an economic and structural crisis that we continue talking about.
And how's the insolvency trend? How's that affecting the economy?
Well, the economic costs of the company insolvencies in the first half of this year could be around a whopping 33 billion euros, and that is according to Credit Reform. The average loss for every insolvency is actually rising, and the number of jobs lost as a result as well increased. 141,000 employees worked in affected companies in just the 6 months that we're talking about of this year, and that is an increase of 6% from last year. Now, this insolvency trend also goes beyond business. The number of people who are insolvent is also rising, and it is higher than it was last year. The rising cost of living in Germany is hurting individuals, but it isn't likely that that will be changing anytime soon because one of the drivers of the rise in the cost of living in Germany is the housing crisis. But construction of homes doesn't look like it will be picking up anytime soon because, of course, the construction industry had the third highest insolvencies due to rising costs linked to materials, personnel, and interest rates. So the trend affects companies, but it also, of course, is having an impact on ordinary individuals. And of course, as long as households here in Germany continue to experience financial pressure, domestic consumption will also be affected.
All right, thank you so much, Chip, there for giving us the details on what's playing out right there for the TGIF trade and the economy in Germany. Thank you.
Thank you.
All right, to other stories now. We see Ghana is set to introduce restrictions on the importation of single-use plastic items, including plastic straws, as part of measures aimed at transitioning the country towards a circular, environmentally sustainable economy. And we see in Tanzania, the National Assembly, they've ratified the agreement for the establishment of the Africa Finance Corporation, paving the way for Tanzania to access long-term investment financing aimed at boosting infrastructure, industrial growth, and economic development. Then moving on to the G20 now, we see Russia's G20 Sherpa, Svetlana Lukash, says the country is positioning itself within the G20 framework to support developing regions, particularly Africa, in key areas such as energy, security, infrastructure, and investment. Our correspondent in South Africa, in a sense, I also had a chat with her. Take a listen.
South African priorities are very well placed to achieve also the goals set by Russian Federation in G20. That is promotion of inclusive global growth. That is job creation. that is development of artificial intelligence and approaches to governing artificial intelligence. That is issues of critical minerals, which is important for strengthening both South African and Russian economies.
Yeah, G20 celebration there in South Africa. Let's take it on to other markets now. Let's see what's playing out in the crypto space. There we're seeing, the Global Financial Crime Watchdog are calling for action on crypto risk there. That's FATF, for Global Financial Crime Watchdog. They're saying that countries need to take stronger action to combat illicit finance in crypto assets, warning that gaps in regulation could have global repercussions there. And then we see tokenized asset markets have surged about $24 billion, while Hong Kong has released a policy framework to establish itself as a global crypto hub there. And a noticeable shift is happening in the social sentiment towards major cryptocurrencies. You know, at this point, we're seeing fresh data from the analytics firm Sentiment shows that while optimism around Bitcoin and Ethereum has recently cooled, bullish commentary for XRP that has surged right now. Let's bring in Gilbert Jokbatana now. He's the lead at the Smart Investor Lodge. Great to have you on the show, Gilbert.
Yeah, it's a pleasure, Mr. Ladi. Great to be here.
Right, and talking about data, we see so much data today. Another one shows that Bitcoin long-term holders are stacking 800,000 Bitcoins per month, the highest accumulation rate in history. What's happening?
Smart money is back. You know, over 800,000 Bitcoin every month is the highest accumulation rate we've seen in Bitcoin entire history. And this isn't just bullish, it's also historical. And it also tells us where the big money believe the future of finance is headed. And also, it's kind of showing us the overall market sentiment and also an early bull circle breakout signal. You know, the long-term holders are always people who have held their Bitcoin from 155 days or more. And generally, these people have always showed over this period of time that they're always less likely to sell during market volatility. And so this is an early indicator of a coming bull breakout loading. If you look at the chunk, they are swallowing in the market. But then there are two other bullish news that correlates with this. One is the Satoshi era. Those guys we always call the OG miners. They have only sold just 150 Bitcoin this year, which is a sharp decline from the nearly 10,000 Bitcoin that was sold last year. So these early miners are not just holding, they're also increasing their position and rather even adding to their position instead of selling. The second news is this which just came out, you know, I think some few hours ago, which is Bitcoin flipped Google to become the 6th largest asset by market cap. So this level of accumulation is actually showing us an extreme confidence in the market, because these guys are not just buying to trade, they are buying to hold into the next major price breakout that the market will make.
So, you know, definitely that's quite interesting. 800,000 Bitcoins being stacked per month. Who's accumulating altcoins at this point? Or nobody cares about altcoins, it's just about Bitcoin?
Okay, you know, I think one thing is that many retail investors are coming into the market or still staying in the market with old, different narrative. So what we've been experiencing this time around is something which is more like a selective alt season or a niche-based alt season. So we've seen where memcoin had a fair share of their rally. We've seen where real-world assets, you know, tokenized asset had a fair share. But this time around, if you look at what's happening with which is developers in Ethereum, when you look at where some institutions are also buying, there are a lot of all-time high hitting in Ethereum, not in terms of price, more like people building, developers who are learning the language to build on Ethereum. So I think that we are going to have this next phase, we are going to have something that is more like a utility-based all season. I don't think we are going to have that kind of everything moves in the market anymore. And so we are not just having people like the typical whales and OG buying. Typically, there's something that is called liquidity flow. Why I may not expect BlackRock to buy much of this alt, except maybe they are ETF based. We have sovereign wealth fund, we have high net worth individuals, we have family offices which are building positions in silence, and this means a lot to retail investors because they should understand that this phase is more like a quiet accumulation phase. And the time this kind of news hit the headlines again, entry price could have even 2x from here. This is not financial advice, but it's actually the market giving us a signal that something big is loading up. So, every bull market is always built in the shadows of extreme fear and also shadows of accumulation. And right now, these shadows are showing us that smart money are accumulating harder, than ever before. So every retail investor will know what he's doing in the market. We aren't just watching; we are picking clues and also doing the same.
Fantastic. Thank you so much. Gilbert Jokpata is the lead at Smart Investor Lodge, telling us what smart investors are doing. Thank you so much. All right, so that's the TGIF trade today. We're seeing Bitcoin there continuing, just staying kind of flat, at this point. But that trades 24/7, so there's more trading over the weekend. We'll give you more on what's happening for next week and what to expect. Thank you for watching. I'm Ladi Williams. From the team right here at Channels HQ. It's bye for now.